Hey everyone, welcome back to Corporate Decoder. Today, S.B.M.T just filed an 8K revealing new stock options, and it hints at something important about their growth strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is giving out options, and the way they are structured tells us a lot about what they expect for the future. This is a current report, basically an update on important events that happen between their bigger financial filings. And the big news here is about stock options. Silver Mining Corp, or S.B.M.T, has granted a total of 60,000 stock options to consultants. These options are for buying up to 60,000 common shares. Think of stock options as a right to buy shares at a set price in the future. In this case, the price is $11.5 per share, and these options can be used anytime up until the 26th of June, 2031. What is interesting is how these options are given out over time. 20,000 options become available next year, another 20,000 the year after that, and the final 20,000 a year later. This is called vesting, and it is a way to keep consultants engaged and working for the company over several years. They are essentially rewarding loyalty and continued performance. These options were issued under a rule that allows companies to sell securities to people they believe are sophisticated enough without needing to register them with the SEC in the same way as a public offering. The fact that they are issuing these options, especially with vesting schedules stretching out several years, suggests that Silver Mining is betting on its stock price significantly increasing. If the stock price goes up a lot, these options that give the right to buy at $11.5 become very valuable. This is a common way for companies, especially smaller ones, to attract and retain talent, particularly consultants who might not be on the regular payroll. We already know Silver Mining has common shares traded on the NYSE American under the ticker SBMT. This filing confirms they are using these options to incentivize growth and future performance. The company also indicated it is an emerging growth company. This means they are a newer, smaller public company and get to follow some less strict reporting rules. This often comes with benefits like being able to delay adopting new accounting standards, which can be helpful for managing financial reporting initially. This section just lists the exhibits included with the filing. There are no actual financial statements in this specific 8K filing that we can dive into for this particular report, as this filing is focused specifically on the stock option grant. Looking at the broader picture, Silver Mining Corp is in the mining sector, specifically other industrial metals and mining. They have a market cap of around $229 million, and their stock price has been trading between $5.75 and $11.23 over the last year. The company has a small employee base, just 12 people. Recent news also shows they were added to the Russell 2000 index, which is a sign of growing recognition and potential for increased investor interest. They also recently closed an upsized initial public offering which raised capital. The granting of these stock options, especially to consultants, is a strategic move. It is a way to align the interests of these consultants with the company's success. If Silver Mining's stock price rises significantly by 2031, these consultants stand to make a good profit. This indicates management's confidence in the long-term prospects of the company and its ability to grow its valuation. What this tells me is that the company is focused on future growth and is using its equity as a tool to achieve that. The strategy here is to bring in specialized expertise through consultants and incentivize them with the potential for significant financial gains if the company performs well. The extended time frame for these options, all the way to 2031, reinforces that management is thinking long term. One notable risk here is the dependence on consultants and the potential dilution of existing shareholders if these options are exercised. However, for a company of this size, it's a fairly standard practice to use stock options for talent acquisition and retention. The key will be whether the company can execute its strategy and drive its stock price significantly higher to make these options valuable and successful for both the company and the consultants. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.